Hey guys, hopefully everyone is doing well. Today's target is to solve question number 12. The chapter which we are related with is company financial statement, and here you can see the overview of this question. Although by look you can see we have two columns of amounts and two columns of title here on left side and right side. But several students of you, they have noticed total of this column or total of this column is not available. What does that mean? It's not a trial balance. So all basic items are mixed over here. Assets can be present on left side. Assets can be present on right side as well. So it means asset, liability, expenses or income possibly be present on left side and they might be present on right side. So everything has been mixed. I have told you if it is a trial balance, asset and expenses would be segregated. Liabilities and income would be written separately on credit side. But here we'll have to be more careful by choosing these items, and at the time of transferring to financial statements, so you will have to be very careful. Secondly, you can see that here a separate para is provided regarding your adjustment, although heading is not available over here, but these are different adjustments. That means they were supposed to be written over here, but due to some reason these were not recorded, and now we are going to adjust them in financial statement. Therefore, due to their adjustment property, they will be entered in financial statement twice, one on left and one on right side. So here question overview is available. Now second thing, we have our performer, and we usually discuss it daily, that three of the sides are present on left. You can see first part would be for calculation of gross profit. Then we will calculate net profit at indirect side, and finally appropriation side would be used to calculate appropriation balance. Three side on left and two sides in right side for calculation of asset side. Look at here, in asset we will see fixed assets and current asset. When you will add in investment, sum of these three parts would create total of asset side and finally total of balance sheet as well. Then we have lower side where we will calculate and will present fixed and current liabilities, adding reserve. So sum of these three items would create total of liability side or total of balance sheet as well. So guys, you have seen the performer, and I'm sure that you people have understood the theme and you are well familiar the target which we are achieving today and what we are going in this particular lecture. So it was told, if you see adjustments are present in question, they will be solved as our first step. We will not be transferring these elements of trial balance in financial statement directly. So first we will see which element is associated with adjustment. That is why we will be doing part of this part of question like adjustment, that would be solved as first step. So we are ready to start. Let's begin. You are required to consider following adjustments. Number one is stock 31st December. Here we are going to see the date, and date is over here 31st December 93. What does that mean? This is your closing stock. For closing stock, we will go to cost of goods sold statement, and there we will be writing opening stock. Then we will add purchase. After that, we will subtract returns. Then we will subtract closing stock, and we are talking about this closing stock. Amount of closing stock is 176,800. So first effect is completed. Now you will go to current asset side, and here same closing stock as its second effect would be recorded in current asset side. Two effects completed. Look at here. First in cost of goods sold statement left page, and then current asset side right page. Two effects completed. First adjustment is now done. Now second, create reserve for bad debts. Alright guys, for this we will go to operating expense side, and here first we will see if that bad debts are present, then we will add additional bad debts, then we will add new provision for bad debts, and then finally we will subtract old provision for bad debts. This we will be doing in operating expenses, and what you will do in current asset, first of all you will note how much amount of sundry debtor is, then you will subtract additional bad debts over here, and after that you will again subtract new provision for bad debts. Alright guys, so let's get back and see where sundry debtors are written. Sundry debtors. Okay, we have got an amount is 83,200. So you will mention 83,200 in sundry in front of sundry debtors current asset. In adjustment we have discussed that reserve for bad debt is present, but additional bad debts are not mentioned. So you will point 0. After that, look at here, the rate of provision is 5%. So what you will do, simply you will calculate 83,200. This is amount of your debtors, and then you will take 5% which was asked in your adjustment. Look at here, bad debt provision 5% on debtors, and here note over 83,200 amount of debtors, and then you have taken 5%. So we have got new provision for bad debts, 0 were additional bad debts, and new provision was calculated over here 4160. So finally you can see that additional bad debts, provision, both were having two effects. It means this second adjustment has been completed. Now we will see our third adjustment, and it is saying provide depreciation to plant. Let's go to fixed asset, and here plant and machine would be recorded. Let's see how much amount of plant. This is 66,2400. Value of plant recorded. Now we will record its depreciation. How? Double 66,2400 value of machine, and the rate of depreciation which is described over here is 5%. So let's take 5%. Now let me know what was 66,2400, 6,62,400. What was that value of plant? And then you have taken 5% which was instructed in adjustment. So we have got the depreciation. Now you will go to operating expense side, and here depreciation of plant and machine would be recorded, and the depreciation which we have seen is 33120. So 33120 depreciation. We have seen dual effects completed. After that, furniture is required to be depreciated as well. So first, in fixed asset, we will note how much amount of furniture is. Look at here, furniture is present 14,400, and now we will calculate its depreciation. 14,400 is amount of asset, and the rate of depreciation, look at here, 7 into 1 over 2, that means 7.5, that means 7.5. So multiply it with 7.5, divide it with 100, we will get our depreciation. Once again, what was 14,400 value of asset, multiply it with 7.5 and divide it with 100, we have got depreciation of furniture. Similarly, we will come to operating expense side, and here depreciation of furniture would be recorded, amount which we have just calculated 1080 in operating expenses as well. So guys, you have seen that furniture depreciation is done. Now loose tool depreciation. Loose tools also your fixed assets. First we will see how much amount of loose tools, and they are mentioned over here, 37600. After that we are going to calculate its depreciation, 37600, and now let's see what was the rate. Loose tool rate is 15%, so here we will take 15%. So let me know what was 37600. This was amount of asset, and then you have taken 15%. So depreciation of loose tool is also available, and now we will be recording depreciation of loose tool in operating expenses. So this depreciation was 5640. Write down over here. Depreciation is also recorded. Two effects are completed. After that, motor vehicle is also required to be depreciated. So let's see motor vehicles. Amount of motor vehicle is not present over here. Yes, we have got motor vehicle, and most probably it is 12,000. 1, 2, 3, 4, 5, 6 value, 2, 2, 4 and 2, 6. Yes, it is 12,000. Confirmation was very important. After that, we will calculate its depreciation. Now we will see how much rate of depreciation of motor vehicle, and it is 20%. So come over here and take 20%. So let me know what was 12,000. It was amount or value of asset, value of motor vehicle, and then 20% was instructed. We have got our depreciation, and now we will be recording this depreciation in operating expenses as well. So depreciation of motor vehicle, I think 2400 was amount of depreciation, and look at here, yes. So both effects of depreciation is completed. Now next step is fourth adjustment, prepaid insurance. Insurance is part of operating expenses. So here first we will write insurance, and we will subtract its prepaid. Amount of prepaid mentioned is over here 1600. Write down in operating expenses, and then we will go to current asset side, and here we will mention prepaid insurance, amount of which is 1600. In current asset side we have also recorded. Alright guys, reserve fund to be increased. So this reserve is purely associated with appropriation side. Here we will record reserve fund increase. Amount of reserve fund is 10,000. Just write down in appropriation debit side, and now we will go to current liability side. Reserve fund increase, amount 10,000 is recorded. So guys, do two effects or dual effects completed, one on appropriation side and one on liability side. It means our adjustment number 5 is completed. Next, adjustment number 6, directors declared on 15 interim dividend of 6 months 3%. Alright guys, interim dividend is also part of appropriation. So here interim dividend, and please note it down, I am using lower line of calculation. So dividend needs amount of capital. Amount of capital is 8 lakh, while rate of dividend is 3%. So what we will do, 8 lakh is amount of capital and dividend rate is 3%. So here total amount of capital, and you will multiply it with 3, divide it by 100. We have got total interim dividend. Now you will ask why we have left this place and why we have left this place without any title. You will come to know with little after. First effect of this dividend is completed. Now we need to have its second effect, but for that purpose note down, I have seen interim dividend over here as well. Look at here, interim dividend 18,000. What does that mean? Total dividend was required to be paid as 24,000. At this stage we have paid only 18,000. So what does that mean? This 6,000 is not paid, and still we are liable to pay this dividend. So we will consider it outstanding dividend. Hopefully you understood. Once again, 3% was total amount of dividend, 24,000, while 18,000 was present in trial balance. It means out of 24, only 18 dividend has been paid. So remaining 6 is still to be paid and it would be considered as outstanding. Now note it down. Only interim dividend of 6,000 would have second effect. Look at here, we were having three amounts, 18, 6 and 24. 24 total dividend, 18,000 was present in trial balance, so it would not have second effect. It means 6,000 was the amount which was not present in trial balance. This would be considered adjustment. That is why for double effect only 6,000 would be used. So guys, you have seen that this interim dividend adjustment number 6 is completed. Now wages outstanding. Next, so we'll go to first part, direct side, and there we will record outstanding. So amount of wages outstanding is 2400. So here 2400 in direct side, and then we will go to current liability side, and wages outstanding would be recorded over here 2400 2400 in current liability side would also be recorded. So guys, you have seen wages outstanding in current liability side, and what we have done, wages outstanding were added in direct expense side as well. First part, dual facts completed. Now we'll be focusing upon number 8, debenture interest for 6%. So debenture interest is already present in trial balance. We can calculate it later on, but we can just write down the amounts. So debenture interest, and we will see if there is outstanding, because it is mentioned 6 months debenture interest is outstanding. It means guys, these adjustments except for the 8 all are completed. Now we can start our calculations or recording of these elements in financial statement. First element is share capital. So we are going to record in fixed liability side share capital amount is mentioned 8 lakh. Now we will see if authorized capital is present, and look at here 8 lakh is authorized capital, and subscribed capital is also 8 lakh. So in fixed liability side here we will be writing authorized capital amount of which is also 8 lakh. But you have noticed this 8 lakh is underlined because authorized capital is just a nominal capital, amount of which would not be added in fixed liability side. Share capital we have recorded, so this amount would be added in fixed liability side. After share capital we have land and building 360, land and building, okay, this is not recorded, so we are going to record now. Amount of land and building was 360,000, and this was mentioned over here, land and building 360, plant 662, and this has already been recorded, no need to go further. Loose tools 37,600, and look at here, loose tools, they are also recorded. After that, preliminary expenses are part of current asset side. So here preliminary expenses would be recorded, amount of which is 19,600. Alright guys, preliminary expenses completed. You might ask question, these are expenses, why we are writing it in asset side? Please understand, we have already discussed for several times, these expenses were paid even before the start of your business. It means they can be considered, or they are being considered as prepaid expenses. After that, Furniture 14,400. So guys, furniture is already recorded 14,400. After this was furniture, then furniture was recorded. Next is cash in hand. Again current asset. So you will come over here, cash in hand. Light is again, but just give me 1 second. Okay. So we have cash in hand, amount of which is 4,400. Write down in current asset side. After cash in hand, we have government securities, and 5% is mentioned. Original value is mentioned. Government securities part of fixed asset. Current value of government securities 39,520. First thing, but interest is also mentioned. So you will write interest on government securities, and that interest would be added. Now we are going to calculate. For that, please understand that 40,000 was original amount and 5% was rate. So here 40,000, and you will take 5% of 40,000 to get interest. 40,000 multiplied by 5 divided by 100. Sign was multiplication. So we have calculated interest on government securities, and that would be added. Now let's go to other income side. Here, interest on government securities, and we have calculated 2,000, and this 2,000 would be recorded over here, and we will see if interest on government securities is also present in question, but here only government securities were mentioned. Next is bill receivable. This is part of current asset. Over here, bill receivable, amount of bill receivable is 54,400. Bill receivable is recorded. Then goodwill, it's part of fixed asset, but we don't have the space, and after so many days we have to increase the space. It was not expected. So here goodwill would be recorded. Amount of goodwill is 64,000. So over here 64,000 goodwill is recorded. Now we will see motor vehicle 12,000, and this is already been recorded, 12,000 motor vehicle. Then sundry debtors 83,200. Sundry debtors 83,200 already recorded. No need to bother. Interim dividend 18,000 already recorded. Look at here, 18,000, and this 10,000 was supposed to be over here. After interim dividend, we have repairs. Repair is part of operating expenses. And now we will see the amount of repairs, 3440. In operating expenses, we are going to record it, 3440. Just typographically, I have written the wrong amount and this was so bad. Sundry creditors, this is part of current liability side, and we are coming over here. Sundry creditors, and a very strange thing happened. Why these amounts have gone over here? They should be present over here. Thankfully, I thought they have been deleted. Over here, we will see amount of sundry creditors. This is 122,400. So in current liabilities, sundry creditors recorded. After that, we have debenture interest, which is given, and this 12,000 would be present over here. Debenture interest 12,000. Okay, listen. This 12,000 was given in your question, and we are still waiting for remaining information. There are three amounts: 1, 2, and 3. This outer column will be filled with the percentage. First column, inner, that would be filled with trial balance amount, and this has been filled. When we will get percentage amount, the difference of percentage and trial balance amount would be written in outstanding. One good thing happened, we have completed our left side. Now let's go to the right side where reserve fund is mentioned. We'll go to liability side, and here reserve fund would be recorded, amount of which is 60,000. In liability side, you have recorded reserve fund. Then profit loss account, this is part of appropriation account. So here profit and loss account. Amount of this profit and loss account is mentioned, 35,200. Alright, in appropriation side we have recorded it. After that, purchases 960,000. Place of purchases is already fixed, 960,000. Then we have written out. These are purchases written. Its place is also fixed, 20,000. In direct side, cost of goods sold statement, written out, recorded. Sales, next, 1231,200. 1231,200 is amount of sale, and then we will see if returns are present. So guys, you have seen that sales are recorded. Now return inward, 28,000. 28,000. We have just we were describing if returns are present. 28,000 sales return inward recorded. Advertisement, part of operating expenses. We have very low space left. Advertisement 10,160. Recorded. Alright guys, after advertisement we have audit fee, and we need some space over here. let's make it possible to record audit fee. So over here, audit fee would be recorded. Amount of audit fee is 4,000. Write down over here. After audit fee, we have carriage. This is part of direct expense. Come over here and write down carriage. 14,800. In direct expenses, we are going to record carriage and the amount was 14,800. Alright. After carriage, we have wages 92,800 and place of wages were already reserved. In direct expense side, wages recorded, insurance 19,600. Let's see if it is present already. Yes, 19,600. Good thing happened, otherwise we'll have to increase one more space. No space left for recording operating expenses. Alright, after insurance stock, 1st January is written, it means it's opening stock and the amount of opening stock is 190,400. It means opening stock would be recorded in direct expense side. Then we have general expenses. Again, we need one more space. So let's increase it. And what is required to be recorded? General expenses, part of operating expenses, amount is 17,200. Return amount in front of general expenses 17,200. After that, look, we were waiting for this 6% debentures. Come to fixed liability side and here debentures would be recorded and we will see if there is any outstanding interest. Amount of debenture 4 lakh. Write down in fixed liability side. Now come over here where interest on debenture was described. Look, these were two amounts. And here, please note very carefully, total amount of debentures 4 lakh and 12% was the rate. Let it be confirmed. No, 6% was the rate. And here you will calculate 6%. Have you seen that percentage is written outside, trial balance amount is written inward, and what we will do, difference of these two amounts, please note 24 and 12, difference would be considered outstanding and that amount is 12,000. So let's go to fixed liability side and over here we will write outstanding interest and debenture interest. Outstanding debenture interest was 12,000, so you will be recording it in liability side. After that, last item is overdraft, current liability. Proper word should be written and the proper word was bank overdraft. Now let's see how much amount of bank overdraft is. 53,120. In current liability side, we have recorded it. So guys, this was and this is absolutely a long question, quite hectic, and you know very well that all of these videos are recorded directly. No pause, no break, no editing, no deleting. So it is taking too much time. But thankfully, all two parts are completed. You can see adjustments are completed. Last adjustment was pending debenture interest. We have completed as well. All items in trial in above are also recorded. It means we are now ready to start our calculation. Direct side would be the first step, sales less its returns, net sales arrived. And now let's calculate amount of cost of goods sold statement. First part, opening stock plus purchases less returns and less closing stock. Cost of goods sold is ready. After that, direct expense side, wages plus its outstanding. So it means we can now calculate cost of goods sold statement. How? First we will see first part of closing cost of goods sold statement, then you will add direct expenses, they are 2, and finally we have got cost of goods sold. This is total cost of goods sold. When you will subtract it from sales, you will get gross profit. Amount is 139600. And now let's see from the book if answer is matched. Look at here, gross profit 139600 and we have got 139600. Gross profit is okay. Now let's start our calculation for operating expenses. Bad debts are not present. Provision is not present. What does that mean? Only new provision was there. Insurance, total amount less its prepaid. Debenture interest is okay, and remaining all parts are written directly, which means we can take sum of all operating expenses. Calculated. No operating income, no other expenses, and we have got other income. It means net profit now we can calculate. Let's take gross profit as our first step. So here gross profit, subtract operating expense, then add operating income, subtract other expense, add other income, and that is 2000. So finally we have got 18,400. What we have done, gross profit less operating expense, add operating income, less other expense, add other income, 18,500. This is net profit answer. Let's now tally this answer with the available answer in the book. Net profit 18,400 and we have got 18,400. Thankfully, 2 out of 5 parts are solved, and now we will be focusing upon appropriation side. Please note, first net profit and then add profit loss given in the trial balance. After that, you will subtract all appropriation expenses. They were 2. In this way, what we have got is appropriation balance 19,600. This is answer and might be available in the book. Let's match. So balance of appropriation account 19600 and we have got 19600. It means all 3 parts on left side completed. Now we can focus upon our asset side. First plant less its depreciation. After that furniture less its depreciation. Then we have loose tools, less depreciation, motor vehicle, less depreciation, building, okay, government security is 39520, add its interest, goodwill, okay. It means we can now take sum of all fixed assets. Finally, we have got sum of fixed asset. Now we will be focusing upon current asset. What we have got is sundry debtor less additional bad debts and less new reserve. We have got debtors amount, no other adjustment required. Let's take sum of all current assets. So current assets are now calculated. And we'll have to see this. How can it be same? Okay, so we need to subtract this new reserve. Guys, total fixed assets are here, total current assets here, no investment, and sum of these three amounts would be considered total of asset side and total of balance sheet as well. It means answer would be available for balance sheet. Let's match. Here, look, balance sheet total 1485,520 and our answer is 1485,520. So we are all good over here. Now appropriation balance was 19600. Here its place is reserved. Add appropriation balance, amount of which was 19600. So guys, it is completed. Let's calculate amount of final capital plus appropriation balance. Then we have debentures, its outstanding interest, fixed liability is completed. Let's take sum of all fixed liabilities. Okay, spellings. $8 lakh and 4 lakh. I think it's okay. We will check it again if it is needed. Fixed liability total is ready, and now current liability is total we will take. That is also completed. There was only one reserve fund. It means total of fixed liability, total of current liability and reserves. Sum of these three would be total of liability side 14, 148, 55, 20. So 148, 55, 20 answer is matched. This was your asset and this is your liability side. Both answers are matched with each other and matched with the answer given in the book as well. So what does that mean? All three answers on left, all two answers on right side, all are matched. With this question has been completed, and you can see that all adjustment with their dual effects are recorded. All elements present in upper side, they have been recorded. Our gross profit was 139,600, and look at here, our gross profit was ready. Then we have calculated net profit 18,400, and you have seen 18,400 present over here. Appropriation balance 19,600, and this was also recorded. Left side three answers matched. Then asset side total 14,85,000 and 14,85,000 is present over here. After that, this is your liability total 14,85,520. In this way, all answers are matched, question is completed. Although you have the solution and you have viewed each and every step. But please note it down, viewing is not enough. You will have to practice this question by yourself. So it is requested to please repeat and revise question by yourself for more than 3-4 times. After repeating, if you still feel anything difficult, you are very open to share your problem through messages, text, or you can comment and share your problem. I will humbly be trying my best to answer your question quickly. So it's time to end our lecture. Thank you very much for your time, and it's time to say goodbye. Allah Hafiz.